Talks between the White House and top Republicans broke down over the weekend, and the risk of the USA losing its AAA credit rating is creeping higher. Andy Laperriere is the head of policy research at ISI Group, which has been ranked #1 on policy research by Institutional Investor for the last 8 years. Andy, welcome back to In Business. Give me your sense here. You say 1 in 4 chance that we don't get something done in the next few days, and that August 2nd becomes a real hard deadline for us.
Right. Yeah. I think there's only about a 1 in 4 chance, but that's certainly a lot higher than I thought it was, and I think most people thought it was a few weeks ago. So I think that everyone's committed to trying to reach some kind of agreement, and I think there's going to be enough give to get it done. But given that the House is going to go on one track and the Senate on a separate track here over the next couple of days, I think 1 in 4 seems like a reasonable probability that they won't reach a deal by August 2nd.
Yeah, well, I mean, in looking at the possibilities, we've been talking about these dueling deals that will come up today, at least before the caucuses. What do you expect to see in terms of proposals that actually might make it through to policy?
Well, I think there's a couple big questions, and I think one of the things the Republicans are trying to do is get a 2-step process where they bank a certain amount of savings, discretionary spending cuts, and raise the debt ceiling a certain amount, and then have another process where 6 months from now they try to get the entitlement savings and raise the debt ceiling when they get that. The president doesn't like that idea. Most Democrats don't like that idea. So in the Senate, they're looking at just going for a smaller package and raising the debt ceiling by the full $2.5 trillion. So I think those are the kind of the key moving pieces here. How much do they raise the debt ceiling, and is there a 2-step process? I think for investors, the key is a 2-step process is probably the only way to get enough savings to prevent S&P from downgrading U.S. debt. So I think that's going to be a big issue for investors that I think they'll be focused on here over the next couple of days.
Yeah, we keep hearing that. I mean, S&P warned about that just last week, saying more or less if you don't get borrowing authority up by at least $2.4 trillion, that you will see some form of credit rating warning or perhaps downgrade.
Well, and I think they said even more than that, which is that if there's not a significant shift in fiscal policy, if we don't make significant progress towards putting the U.S. on a sustainable fiscal path, they mentioned $4 trillion. They didn't say you had to meet that target, but that just to give a rough flavor of what they had in mind, that they would downgrade the U.S. within 90 days. They didn't say they would downgrade, but they said that was, I think, a clear implication of their release. So it's not just we have to raise the debt ceiling to prevent a downgrade, but we have to actually produce some deficit reduction of real consequence to prevent a downgrade, it looks like.
But when you look at the idea that we don't have a deal, the sense within the market is that at this point, it's just rhetoric. At this point, you are going to still see something get done in the next 8 days, but there's nothing truly of consequence. I mean, what do you think will actually change for corporate America, given the proposals that you've seen at this point?
Well, I think that I don't think it's just rhetoric. I mean, this cuts to the core of the differences between the Republicans and Democrats in terms of the size of the government and how much who's going to pay for it and what taxes and revenue should be. So I don't think this is a posturing game. I think this is really a fundamental difference between the two parties. But as far as if there's a small deal and it causes the U.S. to be downgraded, I think the impact on corporate America is if the U.S. is in AAA, then presumably there aren't going to be any companies in the U.S. that are AAA, and there's some states that are AAA now that could get downgraded. The rating agencies have warned that. If there's a larger deficit reduction package, I think that's a positive for corporate America, for the economy. It would be a sign that we can make progress, we can get our fiscal house in order, that we don't need to have a fiscal train wreck occur first. And so I think this is going to be an important message to the markets of whether we're making some serious progress on dealing with our deficit problems or this is a major missed opportunity.
Yeah, I mean, when someone's watching all the Sunday morning talk shows and they're coming into office today to set a trade, they just walked away with a lot of back and forth in terms of the specifics between the Speaker and the White House, upping that, $800 billion to $1 trillion in terms of tax revenue. But when you look at what we are now seeing in the marketplace, the presumption is, as I've been saying, you're going to get something. So What is it that we're exactly going to get? And do you think that the Gang of Six and that proposal truly was the reason why we saw Friday's conversation at the White House fall apart?
Well, it appears so. That, I mean, the White House raised the revenue from $800 billion, which they tentatively agreed on with Republicans the week before, to $1.2 trillion. Personally, I'm actually surprised that Boehner was willing to go along with $800 billion. I thought that was higher than I thought. I think $1.2 trillion is just something he can't sell to his caucus. So I'm surprised that the White House increased the number so much to a level that I think, just as an observer of whether you can get a deal done or not, I think that was just too high to be able to get a deal done. So I'm surprised. I think a deal is absolutely in the interest of the White House. They don't want to have a downgrade occur on their watch. They don't want to obviously reach the August 2nd without having a deal in hand. So there was, I think, a real opportunity here for a deal, and it may still exist. That may end up being the outcome, but it looks like the odds of that are a lot lower. And so, to answer your question, what's going to happen? I think that the base case is it's going to be either a two-step process to produce larger deficit reduction, or a smaller package.
Yeah, I mean, because we're arguing over the specifics of that dollar amount, but all the business community heard was taxes going up out of that sentence. But it's going to be fascinating to continue to track. Andy, we look forward to all your analysis. Thank you very much.